What I'm giving you is the industry perspective. So what we are an investment firm or investment bank or a securities dealer, however you want to call it. And we've been in the crypto area for about 5 years, let's say. Yeah. So we started out in 2019, 2020 with the idea that we could, as a part of our banking operations, implement also a digital assets department. What we've been doing so far was mainly acting as a proprietary trader at different stock exchanges, mainly in Frankfurt, but also worldwide. Our idea was to expand this concept to crypto assets. So market making, proprietary trading, and crypto assets was the idea we started out with. And later on, we also saw some opportunities in tokenization. So we established also a tokenization department, which is now becoming more and more active. But since we are under heavy regulations in Germany, this process is slower than we expected it to be in the beginning. So it may surprise you if I say that MiCA is kind of a non-event to us, because we are in Germany, and Germany had the idea to classify crypto assets as financial instruments from the very beginning. So we were immediately under MiFID rules, and whatever MiCA is doing sounds like a walk in the park, because MiCA in essence is MiFID light, if you will. Yeah, we will get to some of the details in a minute, but in essence, MiCA isn't such a big game changer. And if we would exchange our MiFID rule set with the MiCA rule set, we can only benefit from it. Because the basic idea was that MiCA regulates people who have had no experience with regulations at all, and regulators didn't want to come too hard on these new companies, these new startups, which were with the idea to establish themselves in the crypto market. However, if Bitcoin and everything else is a financial instrument, you are faced with the problem how to deal with it under the existing regulations. And as a lot of the market rules, or most of the market rules, are actually harmonized, fully harmonized on EU level, this classification from a German law perspective caused some hard thinking how to deal with that. Because under German laws, you treat something as a financial instrument. So if you want to provide financial services with it, among others, proprietary trading, financial commission business, investment brokerage, what you have, then you need to have a license for that. And that license comes with heavy regulatory expectations on your risk management, on how you treat your clients, how you classify your clients, AML, the whole package. Yeah? And that is something that comes as a starting point. But then you have to consider, what am I going to do with these EU market rules? They do usually if we look at MiFID or MiFIR, we consider financial instruments as defined under EU laws. Yeah? And EU laws are not the same as German laws. So in essence, we could say, okay, we have these risk management, license obligations, and so on, that's okay. But then now how do we deal with the specificities and all the detail that is in MiFID or MiFIR? And this is still something which is an ongoing process, and what we're trying to do is we're doing as good as we can to comply with these standards also in our crypto asset business, because we also need a single approach. Yeah, we cannot just say, okay, we are dealing with securities here and with Bitcoins here and Litecoins and Ether and everything else, and our rules our internal processes are completely different for each asset class. This is totally unmanageable. Yeah, so for us, it's really a big challenge to find a good way how to be fully compliant with all the rules that we have, but also by not be overburdened with what is all in these details. Yeah, so bottom line here for us, MiCA is a gift. Yeah, if we can lower some of the standards a bit that we have now are trying to implement now under MiFID, but we have to see how that develops, because we are coming from the banking sector, and the banking sector is living with MiFID rules since 2014. Yeah, and we have our concepts and our approaches to these things, and we are somehow also deeply linked with securities business. So when we do tokenizations, our idea is not to issue another Bitcoin. This is something other people may do, and they will do it, and they will look at MiCA as something new. But for us, we're deeply linked in the financial instruments business. We're dealing with securities. We know securities. We trade investment funds. We trade stocks. We trade bonds. We trade derivatives. Securitized derivatives. This is something that we know about, and this is also what we want to transport into the digital assets world. And this is, I guess, I mean, I cannot speak for our competitors, but I think many banks have a similar approach. They're not crypto natives, and their thinking is not crypto native. Yeah? So what we're doing is we're trying to bring what we know, what we have experienced, what are our business models into the new world with these crypto assets. And MiCA can probably help us with that. So if regulators look at our digital asset business and they are assessing how compliant we are in all the details, then they may think, okay, the EU regulator has decided to give this a lighter approach than for the securities business under MiFID. What you see here on this slide is something that we've mainly discussed in the previous presentations on e-money tokens, asset reference tokens. What's left for me here is the other crypto assets, and I think for now in the trading business, at least in the trading business which is conducted by regulated investment firms, is mainly dominated by other crypto assets. So we may use stable coins also to settle transactions, but what we do in essence is we settle in fiat currencies. So on the one side, we're trading crypto assets, and we have a separate settlement process for that, which mainly goes through regulated custodians, because as you may know, Germany has also regulated custodians long before MiCA came into place. And on the other side, we have a regular fiat settlement. So what we're doing is with our clients, we have them send the crypto or the fiat money, depending on whether we buy or sell first, and then we send fiat or crypto to them through regulated entities. And this settlement process could also be enriched, let's say, with stable coins, but that is something which may or may not happen. We'll have to see about that. When we look back at MiCA's history, as Josh and Michael said, it came from Facebook or Meta's threat to issue a large currency which has more users than the EU and the US put together, and that scared the hell out of the EU regulators, because they thought we are losing control over monetary policy if that happens. And besides, Mark Zuckerberg is managing the largest investment fund that ever existed. So that was the starting point. And then later on, they thought, okay, crypto is becoming more and more important. More people are investing. New coins are coming up. But it still hasn't reached a level where it could really compete with fiat currencies, so to say. And that threat is off the table for now, I would say. So stable coins are a good thing, and you can make good money with stable coins because you get interest rates which are higher than anything you've seen in the fiat market, if you look out for such opportunities, but I can't give you advice here. But yeah, this is something which is not, from my perspective, as a representative of an investment bank, it's not so relevant. I mean, now we have seen the opportunity that we can also issue money as a private institution, and indeed we have some ideas about that, and we speak with other banks or investment firms or asset managers whether it makes sense to start out with a project like that, but it's not so much in our focus as compared with the trading opportunities that crypto offers. So yeah. So coming back to this very important distinction between financial instruments under MiFID and other assets under MiCA, I think this is one crucial thing that everybody needs to conduct when considering transactions and considering how to organize your company. And the ESMA has put out or is actually consulting at this moment a guideline how to classify assets. What it comes down to is mainly the comparability test. So you look at some asset and you ask yourself, does this look like a security, like a bond, or like a derivative, or does it not? Yeah, so, and then according to these parameters, you make this distinction, but you can also put this into 30 pages with many different aspects to it, but this is, I guess, what it comes down to. When it looks like a security, it probably is one, and then you can completely forget MiCA. You have to issue a prospectus under the EU prospectus laws. You have to control market abuse on the deepest level, much lighter than is the MiCA approach, and the whole game starts. Yeah. However, MiCA has, for those who are new on the block, some things to comply with, and I think this is a very good approach to start with. And my expectation, however, is that these different standards for crypto assets and traditional securities will level up at some point, because the motivations that people have to either buy securities or crypto assets is exactly the same. And the risks they are exposed to are not higher with securities, rather the opposite. So from that perspective, you could ask yourself, why would I put heavier rules on securities? Because the volatility is much less than with crypto assets. And I can also look at company reports. I can read the newspaper. I can get a lot of information about things which are relevant to the stock market. But on crypto, that's a different game. Yeah, now it's crypto winter, then it's crypto autumn, then it's crypto spring, whatever. Nobody can see into the future, and all the expectation or the forecasts that people have on crypto, I can't take that seriously. Some people say, yeah, be sure Bitcoin will reach $100,000 in the next few months. Others say it will fall below 20,000, and both is possible. So if you go there, you know what you're doing. It's a highly risky business, and no regulator can protect you from that. And that's also not the point of regulation. The point of regulation is transparency, and the regulatory expectations in transparency, that's my personal opinion, are kind of crazy when you look at the prospectus regulations. Yeah, you produce documents, hundreds and hundreds of pages about one security, and it's highly repetitive, it's highly formalized, and it doesn't really help people to make a good decision. It will not make them richer or protect them from losses. Nothing of that is achieved by it. So what we would need is a much more meaningful and lighter approach to transparency. And I think with MiCA, this goes absolutely in the right direction. Yeah, you have a comprehensive document. Yes, a regulator should have a look at it, but let's not overburden it with formal requirements as we have it. So my hope is that when I say that MiCA and MiFID and other prospectus regulations and whatever is in the bucket will level up at some point, then I think also, I hope that some of the ideas that we have in MiCA will prevail over the traditional approach that we have so far. Because, I mean, it's always the same, yeah? You start out with a relatively small package, you have some main ideas, you have some good ideas, some meaningful ideas, and then people start asking questions, and then some industry representatives are not happy with it, and then comes another consultation, papers pile up, and then in the end, the disaster strikes, and we have 7,000 pages of MiFID. this may, I mean, it depends on which side of the table you sit, but I think it's uncomfortable for both sides, for our side and also for the regulator's side, because the same uncertainty that we feel in the industry, I can sense it also from the other side. And this is not a good result, because things move too slow, and markets are really quick. Yeah, and any uncertainty is not good for anyone except for those who love to design new rules and make new rules of rules, and another regulatory standard out of the regulation, and the regulation has, I don't know, ramifications to other regulations, and it never ends in the end. Okay, yeah, so I would like to briefly introduce to you what I would call investment banking 2.0. So you have probably some idea what an investment bank is. It's a particular business model, or it combines several business models which are not lending and which are not deposit keeping. So what investment banks do is they issue securities, they trade derivatives, they trade securities and other financial instruments. They advise on mergers and acquisitions, which could also have some tech implication, because at some point we might see a consolidation of all the crypto companies, which we saw in the banking sector as well. And then you have also the area of investment advice, which is also conducted by investment banks. And all of this can be done with a particular, in the area of crypto assets. So you could theoretically run an investment bank only based on crypto assets, and you would be fully regulated under MiCA. If you refrain from security tokens. This is a business map. It's relatively close to what we are doing, but we don't do all of it. So we might do at some point, but as I can tell you, it always it can be a very cumbersome process to establish a new part of this business model, our new business model, because the real implications on risk management level, on market behavior and so on are sometimes not so clear. So if you want to start an investment bank, you're well advised to do it step by step and not offer the whole bouquet at once. So our main venture is, as I said, a proprietary trading. So what we do is we go out to traditional banks, to investment firms, to family offices, not private clients though, and we offer them to trade with them crypto assets. We offer currently around 130 of them, but the biggest interest is still in the major ones, the 5 top: Bitcoin, Ethereum, Bitcoin Cash, Litecoin. We have to exclude privacy coins, definitely, also because the regulators have made it quite clear that they have no faith in them, which is something that we have accepted from the start. And when we trade these crypto assets with them, we try to comply with yeah, in essence, what MiFID expects us to do. There are still some aspects which are under development, I would say. For example, when we offer prices for crypto assets, we need to make a market conformity check, which is something that you can link with best execution rules for MiFID, for example. So we cannot just offer Bitcoin at twice the price it is traded at Kraken or Binance or something like that. Although these are not official prices, or there's no regulation on these exchanges, but still there is an expectation that the prices we offer somehow conform with what is at the dominant exchanges in the market. For some coins, this is very easy. For other coins, this is very difficult. And sometimes it's even impossible to get reference prices. And then you need to find other techniques to come up with a meaningful price. And for now, it's also, for regulators, I think, quite difficult to assess to what extent the processes are meaningful that we and others apply. Yeah, what we also do is, and this is also something that comes with MiCA, but in Germany we have this for quite some time. We use regulated custodians. It is not like in traditional securities business, for example, for investment funds, a legal obligation to do that. But we do it because it gives us also comfort on the AML side, because the crypto custodian must identify the client and monitor transactions. And so what we do is we tell our clients, look, we're happy to trade with you. Please open a wallet at some of the regulated custodians. We have no expectation that it must be a German regulated custodian. He can be regulated anywhere, because also other countries have similar approaches, because it was also in the EU some kind of consensus that this is one of the first things that you need to regulate to get a grasp on crypto if you establish regulated custodians. With these wallets at the custodian, we transact with our clients. So we have a wallet, the client has a wallet, and it's all administered there. The fiat leg on this slide is not visible, but what we usually do is we trade against fiat. So we might also exchange crypto for crypto. It's also a possibility, but mainly we're trading for fiat. So you have the fiat leg with a traditional bank. This is also something that gives us comfort on the AML side, because the money that comes from our clients always goes through a regulated bank. What we do to be profitable is we try to sell higher than we bought it, and to buy lower than we can sell it. This is the typical trading strategy. And the way we do it is we look at different exchanges. We have contact with issuers of tokens, so we can somehow find a strategy to be profitable in market making. It is not so easy, especially with the high volatility of crypto assets. So our goal is to settle very quickly, yeah, so that we're not really in long short strategies, because that is, in the current markets with crypto, very, very risky business. It can be very, very profitable, but it's not necessarily the case. So we're trying to reduce our RTM K factor, as Michael mentioned, as good as we can. Sometimes, of course, we fail and we hold crypto asset longer than we would like to. And this is something that is also what we need to reflect in our risk management. Yeah, I think my time is almost up. It was a pleasure speaking to you. I hope you have some idea about crypto investment bank and the difficulties that market participants have and the challenges they have. And I'm looking forward to the discussion. Thanks a lot.